What's up, guys? Bang, bang, lunch money time. I'm here with Polina Marinova, Pompliano, Pimp, and she finally has on the right uniform. Thank God. Don't forget that lunch money is now sponsored by BlockFi. You can earn up to 8.6% APY in an interest-bearing account. This is a no-brainer. Go check them out at blockfi.com/pomp. blockfi.com/Pomp, 8.6% APY in an interest-bearing account. You know that I'm an investor, a user, a very happy user. They also have a crypto exchange. You can get a US dollar loan against your crypto collateral. Go check them out, blockfi.com/Pomp. Polina, what is up?
Hi, guys. U.S. unemployment claims held steady at 884,000 last week, the Labor Department reported Thursday. A sign the labor market recovery is losing steam 6 months after the COVID pandemic. Claims have fallen from a March peak of about 7 million, but remain at historically high levels above the pre-pandemic record of 695,000.
I love how they talk about it's holding steady. No, almost 1 million people lost jobs last week. That's what happened. Almost 1 million people lost jobs last week. Before 2020, this would have been the highest week of unemployment ever on record. Just to put it in context. So they say, oh, it's holding steady. No, this would have been the highest week of unemployment ever before 2020 in terms of new jobless claims. So not good. Also not good is when it was falling from 6.6 million, and it kind of kept going down every week. People say, oh, look, people, the rate of job loss is falling. Well, now it's kind of bottomed. And what we're actually seeing is this flat line where every single week now it's around 1 million people are still losing their jobs. Yeah. And so that's not good. Continuing claims?
Continuing claims increased to about 13.4 million at the end of August.
So the unemployment rate, right? The first number we just talked about was the number of people who lost their jobs last week was about 850,000, give or take. But the continuing claims, people who lost their jobs in the past, that's actually increasing. And so when it's increasing, that means that unemployment is going up. So remember how everyone was talking about, oh, unemployment's improving. No, it's not. It's going the opposite direction. It's getting worse.
Data is so misleading.
Well, you can spin the data. The data is not misleading. It's how you spin the data to make it misleading.
Well, things are misleading up around here. All right.
All right. What's next?
So, you know how JCPenney declared bankruptcy earlier this year?
Yes. Were you sad?
No, not really. So mall owners Simon Property Group and Brookfield Property Group have an agreement to buy JCPenney out of bankruptcy. So Simon and Brookfield intend to acquire substantially all of JCPenney's retail and operating assets for $1.75 billion with a combination of cash and debt. This is the best thing to ever happen to JCPenney. That thing was headed for the drain.
Well, no, remember, this is the key here is bankruptcy does not mean a company goes away.
Yeah.
Right? What it means is it goes into the bankruptcy filing process. There is usually a wipeout of equity. So if you held equity previously, it's worth zero. There are bond holders, right, or debt, people who hold the debt. They usually have some sort of recovery of assets, or they conduct a sale of the assets, which is what's happening here, to recoup some money. And now JCPenney has new ownership. There will be a recapitalization of the business, and they'll be off to the races. And so maybe it's successful, maybe it's not. But when people fear bankruptcy, what they don't understand is these assets don't disappear, right? Remember what we were talking about earlier this year with the airlines. Everyone's like, oh my God, we can't have the airlines go bankrupt. Yes, we can. We should have let the airlines go bankrupt because it would have taken bad business owners, people who obviously don't know how to run those businesses correctly, and it would have gotten rid of those equity holders, and somebody else would have came in, bought the assets, and could have recapitalized the businesses and would be off to the races. Instead, what we're getting with the airlines is all of that aid that we gave those airlines, they're still firing a third of their work staff now.
So it says, despite mall owners' desires to keep retailers alive, even if only on life support, it's by no means certain that JCPenney will survive this crisis. Pier 1, which filed for bankruptcy with the intention of staying in business, is now in the process of closing all its stores and going out of business.
Misleading.
Why? Because that guy bought it.
Ty Lopez bought Pier 1.
Okay, they're
Hold
still
on.
going out of business.
No, they're not going out of business, though. They're shutting their stores because what he did was he bought all the assets and the IP. And then what he basically did was he said, I'm not going to assume the physical retail store leases.
Okay.
So these people are looking and say, oh my God, the physical stores are shutting down. That doesn't mean the business is going out of business. It means that they're shutting down the physical retail stores because the person who bought the IP and the assets didn't assume the retail leases. So they basically said, give me the good parts of the business. I don't want the bad parts of the business, right? What we're watching is all kinds of capital markets activity play out right now.
Yeah.
And there's a lot of people who cover these types of transactions and they don't actually understand how the transactions occur. And therefore there's kind of just these like very carte blanche. Is that
Carte blanche.
That's a terminology, right?
Yeah.
Like analysis. They just take a paintbrush and they just paint it across everything. But nuance is very important in this stuff. So Pier 1 is not going out of business. It's that the retail locations are being shut down.
On to TikTok.
All right, this is more your territory.
No, it's not really.
She spent an hour last night watching TikToks.
No, this is not about the product itself. ByteDance is speaking with the U.S. government about possible solutions that may allow it to retain some ownership of the U.S. operations of TikTok while satisfying regulators in both China and the U.S. Those possibilities include handing over operational control of TikTok data to a U.S. tech company while potentially still holding on to some ownership of assets. So China doesn't really want to sell it.
Of course not. Why would they? Well, China doesn't get to sell it, right? It's ByteDance, which is
it's trying to
rumored.
avoid a full sale, which to me sounds like they don't want to sell it.
What would you do if you were ByteDance? Would you just give the middle finger to the U.S. and say, take us out of the app stores? Like
I'd take all the influencers on TikTok and bring them over to China. If I was ByteDance.
But what does that have to do with U.S. operations?
So that I don't care who uses it in the US, as long as I have the American influencers in China, they can use it and they can keep creating content.
Oh, so you're saying that you would lose the US users on purpose and you would take all the influencers because the content's more important than the user base?
Yeah, do you know how many people there are in the rest of the world?
True. But if India and the US ban it, then China is definitely obviously a big market. But other than that,
I'd force everybody in China to download it too.
Okay. You're literally a dictator.
You don't want me being the head of ByteDance. What would you do?
I would sell it.
Why?
Because the geopolitical problem is, I think, too great of an obstacle.
Yeah.
And so what they should do is they should basically try to get the absolute best deal they can, get a bunch of cash, maybe even somehow get some ownership in the assets moving forward, and then just live to fight another day. What you don't want to do is you don't want to basically buck up against
piss off the
US government, right? And because when you do that, you're going to be caught in this geopolitical crosshair. And what happens when they turn and start going after the rest of your business? And it's just,
so could you sell it and then start another TikTok like product?
I mean, you could. There's probably it's hard, obviously, to build these things and scale them like this. But I also think that what we're seeing is we're just seeing that you've got to start to think about country-specific strategies if you're a business. And so if you're a Chinese business, you got to think about how do I do US-based things. And so, you could start something else in the United States, but you have to get a US-based team. You have to have a complete firewall so it's in the US, and then just use your capital to invest maybe, right? So you own it or own a big part of it, but you basically build it in a way that it's siloed from your Chinese operations so that the US government doesn't come after you.
Well, so it says that it's still unclear if the Trump administration will be willing to go along with such a solution in terms of a sale. So, I mean, I thought Trump said he would ban it, but now they're talking about selling it. But it's still unclear, even if they agree to a sale, that Trump will agree to it, correct?
I think what they said was there was a ban on on transactions with these very specific Chinese companies. And those transactions would include the app stores couldn't support them, things like that. So it's effectively a ban. But if a Chinese company doesn't own the assets, then TikTok wouldn't even be in the crosshairs. right? If a U.S. company owned it, then that executive order wouldn't apply.
Interesting.
So that's the whole idea of selling is if you sell it to a U.S.-based company, then it can continue to operate because now it isn't affected by that executive order.
Got it.
All right, what's next?
One of the winners of the coronavirus pandemic
Winner.
is Shopify. The coronavirus pandemic has forced many small businesses to finally open online stores and turn to e-commerce software provider Shopify into one of the biggest winners of the retail shakeout. So while all these like physical stores are trying to figure out what to do and declaring bankruptcy, the Shopify as the platform for these small businesses is thriving. Millions of small businesses have had to adapt to a world where online sales abruptly jumped to levels that weren't expected for years. U.S. e-commerce sales surged 37% to $200 billion in the second quarter.
Yeah, I mean, look, Shopify's got a fantastic business. I use it. I think it's a great product.
I really like Shopify's CEO. I think he's
Toby?
great, Toby, and I think he's really thoughtful, and I think that he's doing all the right things, frankly.
Yeah. And the other thing too is all these small businesses are realizing like, hey, we need a digital strategy, right? And so it's kind of like WordPress. For those that don't know, Shopify is basically like if you want a blog, you used to get a WordPress, right? If you want an email newsletter, you get Substack. If you want an online store, you use Shopify.
Do we know why they're going to Shopify, not Amazon, for their online presence? Or are they doing both?
There's a different type of experience, right? So you can go sell products on Amazon. Amazon's going to take 40%. They're going to have a lot of control.
You don't have your own page.
Yeah. Well, yeah. And I think that there's just a lot of control that you're giving to Amazon. With Shopify basically gives you the tools to build your own online store, right?
Yeah.
So the difference is like, do I want to go sell it on somebody else's store or do I want my own store?
And you could do your own marketing, whereas Amazon doesn't allow for that.
Yeah, you own the customer relationship. I mean, it's very, very different.
Do you know what percentage Shopify takes? This article doesn't tell me.
If I remember correctly, I thought it was only like 8% or something.
It's less. I think it's less than Amazon.
Well, it's definitely less than Amazon. Amazon takes 30
But
to
whatever
40%.
percentage, it takes a percentage of every transaction, and its revenue has nearly doubled to $714.3 million in the second quarter. Wow.
Yeah, makes a lot of sense.
That's wild. Okay, another winner of the COVID pandemic. This one kind
Winner.
of unexpected, I think. The Athletic, that sports media site, says it hit 1 million subscribers after surviving the sports shutdown. How has the Athletic weathered this months-long shutdown? And why have subscribers continued to pay for its content?
Short answer is I don't know. This is very impressive, the fact that they've now hit 1 million people. I think it took them 2 years to go from non-existent to 100,000 subscribers, and then it took them another 2 years to go from 100,000 to 1 million. So obviously they're doing something right. One of the things that is very interesting to me is there could be a thesis that because live sports wasn't happening, people still wanted some sort of sports content. And therefore they subscribe. So it actually could like have this like weird effect.
Well, because they also do profiles, right? They don't only do like gamers.
Well, and people are paying attention like, oh my God, sports got canceled. Like, when's it coming back, right? What's going on with these teams? Is this going to happen? Like there's definitely an argument to be made that the shutdown could drive more interest rather than less. Because it put more of a focus. And then also from a macro trend standpoint, people were just sitting at home. They were consuming more content in general.
Right. And also they had the right business model. So while other media companies that are ad-based saw their revenue dip 20 to 40% this year, the co-founders of The Athletic credit their subscription-only business model with keeping the company afloat. The company makes more than $60 million in pure subscription revenue and has ad sales from podcasts. That's a lot.
Yeah, I mean, that makes sense. So, I mean, look, it's fantastic that they're doing well. Look, I am a fan. One of my brothers subscribes. He loves the coverage. And so I think that makes a lot of sense.
They publish 200 articles a day, guys.
Yeah.
That's wild.
I mean, look, it makes sense.
Yet somehow I never see their content anywhere.
Because it's behind a paywall.
I know, but like, are people not sharing it? That kind of sucks.
No, it's behind a paywall.
All right, Starbucks. Let's talk about Starbucks. It's finally ditching straws and ushering in its long-awaited sippy cup lids for iced beverages. I don't like that the hole is like not close.
Hand me mine.
Oh.
I get Starbucks every morning. You want to see what I do? They said that you can't have a straw. I put the straw right in that little sippy cup hole. You see that right there? That's called innovation. I'm not getting rid of these straws.
Well,
why do I want to drink it as like a little kid?
When they get rid of the straws, you're gonna have to.
I'll bring my own straw.
Okay, I think that's what they want you to do.
BYOS, bring your own straw.
The straw-free lids are anticipated to be fully adopted in company-operated and licensed Starbucks stores in both the United States and Canada by the end of the month. We got to get you one of those permanent straws.
This is ridiculous.
The lids contain roughly 9% less plastic than Starbucks previous. You know what I said? I was like, let me solve your problem. For these cups, take the plastic thing off and don't use it. Because I do that. I don't need it.
That is the worst idea I've ever heard. You want them to serve coffee in a cup like this without a lid.
Yes.
To everybody.
Yeah, why not?
Do you realize that they put a lid on it to prevent it from spilling?
Spillage? I don't care. Be careful. They have a tray for you.
Guys, Polina is very smart. Polina has a lot of great ideas. This is not one of them.
Yes, it is. Is that a better idea?
Yeah, this is a great idea. Look how innovative I am.
Okay. All right. Ready? Ready for my joke?
Leave a comment because Polina will go read all of them, I promise, and I will read them all today to make sure we know, should you have no lid on your Starbucks or not?
Get yourself a cappuccino, take the lid off. Or whatever, don't have them put the lid on. Drink it fast, it won't get cold. It's scorching hot anyway. Okay, wait, I was gonna tell you. Oh, I do read the comments for that one person who said, I have a very particular look. Am I related to Genghis Khan or whatever? Maybe.
Genghis Khan.
You know, the Mongolian emperor, whatever he was?
The richest man in the world at one point?
He probably was. I don't know.
Somebody asked if you were related to Genghis Khan.
Yeah. Do I look Mongolian?
Maybe you have some riches buried somewhere that we should go find.
Ready for my joke?
Yeah.
My Genghis Khan joke?
Yep.
What did the lawyer say when he put his luggage to sleep?
Oh, I rest my case. I saw it.
I knew it. Guys, in the last video, he was over there cheating and stuff. I saw you.
What happened when the doctor told me I was going deaf?
It's really hard for you to hear the news.
Good, you read that one too. All right, guys, that's it for Lunch Money today. Well, Wall Street's trying to get rich. The rest of us is trying to get our lunch money right. We'll see you tomorrow.
Bang, bang. Hope you guys enjoyed this episode of Lunch Money as much as we did.
And don't forget, Lunch Money is now sponsored by BlockFi, so go check them out. There's a link in the description that you can click on. I'm an investor, a user, and a huge fan. What?
You're a bigger fan of BlockFi than you are of me?
BlockFi is my second favorite thing in the world behind Polina. They've got 3 products. They can give you a US dollar loan. You can earn up to 8.6% interest on an interest-bearing account, or you can buy and sell cryptocurrencies on their crypto exchange. I personally use the interest-bearing account. There's not very many places where you'll find up to 8.6% interest on a deposit in an interest-bearing account. Go do your own research. There's risk associated, but 8.6% is pretty compelling. So click on the link in the description. Say thanks to the folks at BlockFi. Subscribe to our channel. Like the video. Annoy Polina in the comments. And we'll see you guys tomorrow.
And be kind to your friends.